Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Good morning, everyone. Today's Thursday, September the 4th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Zingers, we've got an adjustment in the schedule. Please take a look at your chat for that. And of course, for the Hive, we also have a meeting today. So today's going to be pretty action-packed in terms of the things we are going to cover. A lot of stuff going on, particularly from the options market perspective. So we'll be covering that as well. Here we are taking a look at the E-mini S&Ps. And what we can see is the sharp sell-off that brought buyers back in, and then another sell-off that brought buyers back in. And each of these times we held the lows. Yesterday we had a double bottom of sorts that brought buyers back in. But this reflexive bounce, both on, what day was that? Tuesday, and then yesterday, tell us the same thing. There are aggressive buyers sitting underneath this market trying to hold it upward. And at the same time, there are aggressive sellers trying to push the market down. So buying pressure comes from underneath. Selling pressure comes from above, right? Because buyers don't appear anymore, and then the sellers can step in and see if they can get the prices down so that they can buy at a discount. What is the line in the sand to watch today? All right, in order to do that, we take a look at the highest volume candlesticks of prior days, and the big box that we are sitting in right here, this is the Jackson Hole box. And let's see if I can get that just a bit wider so we can take notice of it. All right. So this box right here represents the Jackson Hole conference event. We've been below it. Now we are sitting in it again. We're just filling in this volume event. My thought is that we are in some gigantic mean reversion. And so if I stare that down to try and find out what it is, it could easily be this 63 simple moving average, or it could be the VWAP, which is 6,329. The 63 moving average will continue to move up as price action moves sideways, but you can see that momentum drifts down. I got asked a question yesterday, hey, how do you tell what's going on with momentum? Is it the size of the candles? No, it is not. This talks about the strength of motion. It's like putting your foot down on the accelerator or putting your foot down on the brake, right? It's the speed and acceleration of motion, right? Trend is direction, and momentum is the acceleration or deceleration of that direction, okay? So we have a topping formation here again. It looks pretty even in my mind. I'm not going to want to short anything up here unless I get a massive move up that fades, okay? So that's what we're staring down. Today, you can see that what we're trying to walk through is Friday's closing 30-minute candlestick formation. It is the largest candlestick of recent days. And so this edge, all the way up to 64.76, gives us the framework of where the traders are battling. Right now, it is my suspicion that pullbacks into 6,450 to 6,455 will make a pretty nice buy area, right? And so if we stare that down, we can see that there's a fair bit of support. Buying has just crept in here at the 6 o'clock candlestick, and then it was met with selling, so it's a little bit of an outsized formation, but still dips or buys. This VWAP is sitting here very nicely. It works as a tight moving average. We don't need that tight moving average sitting in there if we've got the VWAP, and you can see that VWAP has been trending up day after day, but jammed up now into this resistance area. If we break 6,477, the next line in the sand is 6,486, and then 6,501, and that's where the call wall is sitting, folks. We've got a call wall sitting up there that's pretty important. And so we need to realize that if the shorts are caught flat-footed, they're going to run right into that line. And so we've got to be really careful about that zone, okay? Dips are buys in general. Could they be deep? Yes. The closing VWAP for yesterday's trade action is 6,445. The low end of the last 30-minute candlestick of yesterday, 6,432. These are going to be the spaces that we stare down, all right? Tough trading again to set up. If you set up an overnight trade and you're looking at that, it could be, hey, trend, I'm inside of that 30-minute candle. I should come down to the 50% range. And this 200 clipped that as well as the VWAP. And it said, no, we're going up here into the point of control. And that's where they're dancing right now at 6,470. We know the 6,471. It's a familiar number to us. And so we expect that the noise is sitting there. Some days price action simple, some days not. And we've got piano keys here. They are retracing. So the base of support, which is the close of the prior 30-day candlestick, 6,458, long action event with the risk event being somewhere close to the VWAP. And that still holds today as the price action event. We are also going to get rollover in just a wee bit, which is going to make things a little wonky, but we can figure it out. Let's take a look at the NQ. Again, Jackson Hole box. Here's the interesting thing. Can you see that the Qs are underperforming in a relative sense? Not really physically. It's rotating the same way. We are in a dip buying mode, but there's just not a ton of heat moving in here. So what are we staring down? Here is the last 30-minute candlestick of the prior day. We can see that holds itself as frontline support. That's going to be, that's going to be the zone that we stare down here. And that high is a marker from times past. And that number is, that high is actually the volume point of control. You'll remember me talking about that number, 23,450. The break to the north should give us the target of 23,540, right? This is a big volume candle from the left. And then this is another volume candlestick, that we should be paying attention to. Don't have too many of these floating around. It makes things really noisy. So this is what we're staring down, 23,540 to 23,565 relative targets. If we break through 23,540, it could be an exhaustion move to pull us back inside. How do we know? We want to look for big volume that loses its levels. And so yesterday we saw a twofold event here, right? Our opening candlestick formation gave us an outside candle for the rest of the day, and then it comes in, holds the low of the opening range, closes above the opening range, and that, folks, looks like a breakout event to me. VWAP, support. That's what we're looking at today, 23,430. And so we'll see the dips being buy zones. I like the area around 23,430. The VWAP close from yesterday is 23,406. That's of note, but not super dramatic in any form or function. And so these are just the zones that we want to watch in this area. We can easily see, I don't want this one here anymore. Just put it up there. Right? What we're seeing here is the line that is the VWAP. Trend is up. to flat, and momentum is in positive territory and treading water, right? It is lower, and that gave us this fade, but now it's moving up again. I still think we reject these higher zones. I'm looking for blow-off tops, things that look like this, high volume events that cannot hold and then lose the pressure. That's very, very important to me to look at that. Lines in the sand, value area low, 23,300, value area high, 23,565. Hard to talk about news because, it's news is to and fro. So the traders are largely ignoring a lot of the news. This is what happens when we get news fatigue, right? It's just a part of things. And so news continues to ebb and flow. I have to tell you something. If you trade your politics, you're going to lose money, okay? Trade the chart. Don't trade the politics. Just stare down the pictures. And if you don't like what's going on, call your congressman. And if you're fine with what's happening, that's okay too. Just don't use it to trade your charts, right? Please don't do that. It's not conducive to performance. That's good. Okay, so here we are. First 30-minute candlestick of the YM is still currently the high, right? Since yesterday. And the closing candlestick was largely a recovery. So we're looking potentially at a breakaway formation. Potentially. Okay, so momentum, it's not super aggressive. So my thought is that it is not a breakaway, that we're going to have wick action up into the VWAP, 45,401, and then an exhaustion event. Right now, on the thin volume events, we are seeing them trying to break above 45,300. And that is going to be someplace that ought to run, right? If you want to take a scalp trade there, you certainly can. You're above the 63, you're above the VWAP, the 200 is to the north. We can see that the target might easily be 45,366. What do we have going on today in terms of releases? Today's Thursday, so we have, it is 1 day shy, right? We've got the ADP, but tomorrow is the employment situation. And my suspicion is that that is why the traders are treading water. They're treading water, waiting for that Friday decision. I certainly am going to be hands off from that space, but I do expect a massive bit of volatility coming into the chart that is likely going to give us future direction either to the north or to the south. Okay, so upward formations, 45,407. Look at how far away we are from the value area, 45,470. We are well outside of that value area. My thought is bounces outside and to the edge of the value area is going to give us another short. And that's what I think, right? We are just clearing Tuesday's 30-minute candlestick open. And so the floor of support looks like 45,249 all the way down to 45,225. Very, very messy, folks. This is very messy. We got a ton of cross currents. And if you're looking for ideal setups, sometimes they're just not there. All right, let's take a look at micro Bitcoin. As I mentioned, yesterday I took this short at 113,000 because this is what I talked to us about. I said, hey, I don't want to short it until it gets up there. That's going to be my sweet spot. Look at how long I had to sit in this stinking trade. This drove me bananas. Luckily, I got to keep it overnight. And now it's in a good place to cover. So what are we staring down? High end, 113,000. Low end, I still think it's 109,000. So we're sitting in this great big pocket. Listen, if you have not traded this chart, give it a go. It's actually really fun. The tick sizes are manageable. You don't feel like you're going to pop a blood vessel anyplace. And when it moves, it can give you a really nice return. Really, really nice. It's a ton of fun to trade, I have to tell you. It's lots of fun. So what are we staring down? We're staring down this monstrosity of a candlestick that occurred on September the 2nd. We're holding the 50% mark of it. Let's see what we expanded to. We expanded to the 150%. And now we bounced off the 50%. Now, I showed this to us yesterday in terms of rhythm, right? You have to look down here in the volume areas to see where the high volume candles are. They don't work like our candlesticks always coming in at 9:30 and 3:30 Eastern time. They do have reflexive motion. But what are we doing? We are under the VWAP, we are under the moving averages, and momentum lines are under zero but trying to recover. So they're looking for some sort of mean reversion event. My thought is 111,900 makes the next nice short. See if it comes back into 110,800 and then loses the value area low. If it does that, we're back down to 109,600. Okay? Very rhythmic chart, but you can tell that liquidity is shifting out. Also, very interestingly, you're going to see the gold chart look just like this, right? And again, that's the difference between risk on and risk off. So that's what we're staring down in micro Bitcoin. Let's take a look at our good buddy Earl. So why is oil down today? OPEC just said, I was just reading my my commodities newsletter, and they said that OPEC is thinking about loosening curbs. That's going to happen. Okay, so look at what this thing has done. It's lost the area. Now, this was a good setup last night. Here's why. Closing candlestick formation. Here is the largest volume candlestick of yesterday. It did not come at the close of the day. Let me do this. Let's crudsickles. Hang on, folks. Let's remove all the annotations. Right? So let's take a look at this for a hot minute. Here we have this 4-hour formation. We have a blow off top here. This is my thought about resistance areas, right? Right around this zone. I expected it to have a little bit of trouble right here at 65 and change. And so it did. Now, let's go to our 30-minute chart and see what happened. Here is, again, these weird 5 o'clock candlesticks that are coming in. Somebody's doing something big here, right? That's a big fat piece of motion. Notice during the course of the day, we draw that Fibonacci. We're going to draw low to high, right? It loses the 50% marker and then comes down, chops wildly here, right? You could have a short, you could have a long, you could have all kinds of things going on here. But who wins the day? Here's somebody trying to go long right over that 50% marker and then gives it all back. So there's a rock fight going on here, right? Very big formations, but they lose the level, high volume area, opening range. Now, here is all of that noise right above us into the low of this candle. Yikes. It's not letting us do that. That's where the high volume is. Right, so we have a line in the sand right here at 63.80. All the big volume is above us. So they had a big fight and the sellers won. How do I know the sellers won? Because price is down here. That's the only way you know the sellers have won. This price is gone. Look at the opening candle. Smack into that high volume low. They can't hold it. So if you say to yourself, there's an opening range event, trend is down, momentum is deeply negative. So if I take a short here, my stop can be 20 cents to the north, maybe 25 cents. That's $250 per contract. If you are looking at doing a hold CL, if you're doing just an MCL, you can do 3, 4 of those, whatever the case is. And the goal is to run it down into the next high volume pocket. All right. So that first line that you would have as your target comes from the formation on the 28th of August. We have 2 big lines here. First one, we've already broken through it, right? You can see the traders broke through this line, and oh, shocking. Look at that. High volume candle. Listen, folks, always the same. You just got to know what you're looking for. Here is the first target. That first target, I know some of us are like, hey, I want a 2 to 1. I need to have X, Y, or Z. It's all up to you. For me, I'm just looking for motion. If you're thinking about 2 to 1, and the market doesn't want to give you 2 to 1, there's a problem, right? So for me, I try to get it at 63.81. I have 23 cent stop, and I'm going to try and move it down into the next support zone. And if I get fortunate and trend continues, I leave the second one on for the next high volume candlestick of note. Where is that? $63.28, right? That's my next target. And I'm done. Sharp downward trend. I don't move my stop to 0. I don't move my stop to break even. You could if you wanted to, but this kind of formation, absolutely fantastic. Huge battleground here, knocked him to the floor. Are they going to try and hold 63? Probably. If they don't hold 63, where's the next volume candlestick of import? Going to be this one, friends, 62.76. That's going to be the zone that they watch next. All right? But this is not surprising since OPEC came out and said, hey, listen, we're going to give some more oil to the market. I do believe they're trying to pick up Russia share, which, I certainly would do it if I was Saudi. Makes sense to me. All right. See this? Looks just like Bitcoin. So yesterday, towards the end of the day, I was talking about, hey, listen, gold's moving up too far, too fast. Makes me nervous. Somebody chimed in, as always. And so I started looking for the fade, and I said, hey, listen, if it gets down to 36.05 to 36.10, I'm going to look for a bounce. Well, I was not awake, and I was not about to put a trade on, but yes, actually I was just barely awake because I had just come in from church. So did not look at my charts. This did give the trade from 3,605 to 3,614, which would have been the target, and it fell like a stone. Where did it fall to? Well, here is a big volume candle from nighttime, and then the second volume candle, which occurred at 10:30. These guys are also getting a little weird with when these price actions are coming in. And wouldn't you know it, ladies and gents, just shy, this candle breaks right into that edge and then bounces. They have a double bottom event, 3,581. What's going on? I think this is in a mean reversion. I do. They are saying to themselves, I think I want some profit. And so that's exactly what's happening. We've got a high, and then a lower high, and a lower high. My suspicion is we move into the volume node, the value area low. Look at that. The value area low, the VWAP, and the point of control, all within $10 of each other. To me, that looks like a suction cup. Things are going to be magnetic towards that area. If I am wrong, we will break 3,609 and then break 3,624 before rotating back. But I do see a mean reversion event coming here. It seems very, very likely. Playing it should be a pretty nice trade. If we can get the short up above here, might not be a bad idea to use a micro and just let it stroll all the way down. Nice, easy trade. You're not working super hard, and the money's coming to you. I do like that very much. Lastly, SPY. Now, what I want to do here is show the Mentor Q formations. Take a look at this. Bounced right at put support 2 days ago. Held the formation, and then yesterday broke up above another higher low, right? What are they trying to do? Fill this nasty gap is what they're trying to do. There's a call wall here for the 0 DTEs. So guess what's going to happen when the market opens? They're going to have a gigantic fight right around here. And wouldn't you know it, that's the Jackson Hole line, right? It's the Jackson Hole event still coming into play. Traders still sitting around going, what gives, Professor? My thought is, if we get out here easily, we could have another short squeeze that takes us back to 647. If we lose the area, we're going to move into a higher low, likely the value area low, and bounce. So I think on the dip action, I would like to see the short spreads, the short put spreads, get picked up down here. We let it push to the top of the edge and pick the call spreads up here. And then we're going to get max benefit. So we're going to sell them as two separate spreads because we have no idea what direction we're going to go in. We just know that if it comes to the edges, it should bounce. So it'll quickly tell us if we're on the wrong side. And if it comes to the edges, it should fade. And that's what we're staring down. This call wall is going to be extremely important because the traders are going to have to battle for dominance. If the sellers cannot come in and push price down, they will have to buy the SPY up in order to balance their delta. All right, everyone, that's it. Take care, stay alert, and I'll see you on the streams.